to be an increase of 1,000 there. There were no special factors. The advanced seasonal adjusted insurance unemployment rate was 1.7% for the week ending June 20th, unchanged from the previous week. The numbers for seasonally adjusted insured unemployment during the week ending June 20th was 2,274,000, increase of 15,000 for the previous week. The previous week level was revised up 2,000 from 2,247,000 to 2,249,000. The 4-week running average was 2,252,500, an increase of 15,000. So that was basically it. The unadjusted data, the advanced actual initial claims on the state programs unadjusted totaled 273,182 in the week ending June 27th, an increase of 9,983. That is 3.4%. There were 305,790 initial claims in the comparable week in 2014. You see there were more there. The unadjusted insurance unemployment rate was 1.6% during the week ending June 20th. So much for this one. Let's go now to our PMIs. And we'll start to get the impact before the big one, as they say. Oops, just a second here. My pointer is going a little bit. Okay, this is the market people. We use their PMIs. This would be the Eurozone's PMI final data here. The flash composite output index at 54.2. It was 54.1 in May. The business index at 54.4. It was 53.8. Eurozone rose to a 4-year high in June as the level of new business and employment continued to expand at solid rates. The final market PMI composite output 54% in June, up from 53%. The rate of growth improved both in manufacturing service sector. During June, manufacturing rose at the quickest pace in the year, while expansion service sector was the fastest since 2011. The national PMI data signaled that Ireland remains at the top of the PMI growth league table. Spain in the second position there. Very interesting there. Economic growth accelerated in Germany, Italy, and France during June, hitting a 2-month high in Germany. We'll get to them in a minute. Moreover, the French manufacturing sector signaling expansion of output for the first time since May of 2014, meaning that all the big four manufacturing service sectors reported growth. And some of the rankings here, I'll give him Ireland at 60.9, that's a 6-month high. Spain at 55.8, Italy at 54, and the flash in Germany is 53.7, and also in France at 53.7. The survey indicated that both employment and new business had risen. Job creation in Germany and France remain broadly steady in June. June saw a further marginal decrease in the average output changes. Germany, France, and Ireland reported increases there. Services at 54.4% there. Growth in staffing levels slowed slightly in Germany, Italy, and Ireland. Meanwhile, France and Spain showed strongest job creation since December of 2011 and September 2007, before the depression hit the Eurozone. The outlook for the sector also remains positive in June. Optimism ticked higher in Germany and France, but edged lower in Italy and Spain and Ireland. June data showed a further divergence in firms' input prices and output prices. Cost burdens increased during the month, although the pace of inflation eased. And what else? from Dr. Williamson. Despite the escalation of the Greek crisis, this is what we wanted to get to. In the second half of the month, the final PMI for June came in slightly above the flash estimate, suggesting the turmoil so far has had little discernible impact on the real economy. A lot of this is because of the long Greek financial crisis, the bailouts, the almost defaults and finally default. The markets and these economies, respectively, had been anticipating it. And when you have an anticipated situation, it's a little bit different from a quote-unquote sudden shock where everything literally goes to hell in a basket. Business activity, back to Dr. Williamson, expanded at strong rates for just over 4 years in June. Hiring remained reassuringly resilient, and job creation also running highest for 4 years in the past 2 months. The survey points to GDP rising by 0.4% in the second quarter, with an upturn led by Spain and Ireland, along with ongoing robust growth in Germany, but recovery now building momentum nicely in Italy and France. The combined EBC stimulus and low inflation appears to be boosting spending. That has been the ticket, and consumers and businesses offset Greece's anxiety. However, with the growth of new business slowing for the third month running, this survey is hinting that some risk of urgence is creeping in, which could hit growth in the coming months. Now, that's going to be an interesting point we have to look at in a lot of this, where normalization is. The German service PMI final business activity index at 53, the final composite at 53.7. We won't spend a lot of time on this, but the German services reported 25 consecutive months rise in business activity in June. The market German service business activity index remains above the neutral 50 at 53. So that signals things are not bad there. Commenting on this is Orville Kolinsky. He's an economist there. I hope I didn't butcher his name. Probably did. The June PMI results signal a re-acceleration of the service sector activity in Germany. Data, moreover, suggests that there is plenty of scope in Germany's service sector to absorb increased demand as business outstanding fell further. Looking at the composite, it appears that the pickup in output growth is a broad base with both manufacturing and service. And let's get the German composite output index, which measures the combination of output of manufacturing and service sector, rose to 52.6. Rose from, that was in May, to 53.7. However, the average reading for the second quarter as a whole at 53.5 was weaker than 54.2. In contrast to accelerated output growth, new business placed in Germany's service sector providers increased at a weaker rate than was the least marked in 2015 so far. Sector suggests that hotels and restaurants saw the steepest rise in new work, when new orders rise only marginally in service sector companies reported slump to work on business. Backlogs were reduced for a fourth month running, although at a slower pace than in May. Meanwhile, business service firms combined to increase workforce numbers in June, thereby extending the current run of job growth to 20 months. The rate of job creation was little changed. This does it for Germany, and we'll move on. To Russia. This is a service PMI here. Slight fall in service sector business activity during June. Activity decline in spite of ongoing growth in new work. Capacity signaled in service sector. Backlogs and employment both continue to fall. The summary here is activity levels in Russia's service sector were down marginally in June, as ongoing growth in new business provides insufficient the strong relative to capacity levels. Companies were able to comfortably deal with both incoming and existing workload, as evidenced by sharp reduction in backlog, posting a 49.5 in June, down from 52.8 the previous survey period. Russian service business activity index slipped below the magical 50% mark by marginally for the first time in 3 months. Manufacturing recorded identical size margin reduction in output during the last survey. That meant that the Russian composite PMI index recorded a level 49.5 in June, down from 51.6. But that was in spite of the economic boycott, so not as bad as you would think. A comment on the German PMI. This is by Paul Smith, senior economist at Market. The PMI data from Russia continues to underwhelm with slight falls in activity registered across the private sector as a spare capacity remains evident. Jobs subsequently continue to be cut. Well, those adjustments to be made. You have to understand the German economy is in a depression. Companies are hoping, that this will provide a platform for forward growth. It will indeed. Let me just catch the rest of this. The Russian composite output index in new work was insufficient there. Excess business resources relative to requirement meant that firms chose to cut payroll numbers during the last survey period. June's survey showed that payroll numbers were now declined for 16 months as service providers sought to optimize their resources relative to requirements. Manufacturers also cut their staffing levels during June, although the rate of contrast eased and was slower. And this is basically the same cycle other industrial countries have went through before the situation. Now, also remember, the price of petroleum products are now up, and that will, in the long run, help the Russian economy. On the price front, the major service sector companies left their output unchanged, unmoved in June, pushing respective rates of inflation down to a 6-month low. There was some problems in the Russian Federation with inflation, so we go on. As we move through these, we'll go to China here. This is the HSBC China Composite Index. We'll quickly move through it. The rate of expansion eased to a marginal pace that was the slowest recorded since May of 2014. This was signaled by the composite rate index only slightly above the neutral 50 mark at 50.6. Decline in the headline index was partially caused by a further fall in manufacturing output in June, by marginally. And this is what we get in a number of these countries. January is signaled by the HSBC China's service business activity posting 51.8, down from May's 8-month high of 53.5. Slowdown in service activity reflects salt business gains in June, which service providers signal a slower increase in new orders in 11 months. However, manufacturing saw a marginal expansion for new work. As a result, composite new business increased only modestly over the month. Furthermore, the pace of job creation was the slowest in 3 months. Manufacturers cut their payrolls for the 12th consecutive month in June, and the latest reductions, the sharpest since February of 2009. Outstanding business at service companies declined modestly in June. And so goes China, so goes many other countries. The Chinese service providers saw a further increase In total cost burdens, not unusual there, the rate of input price inflation was only slight and much weaker than the series cost. Price changes